Today, Bitcoin bounces a day after the Fed cut rates. Dogecoin and XRP ETFs hit the market after a rules change from the SEC. And Tomas Perfumo of Kraken breaks down what's next for crypto prices as the Fed signals more rate cuts are ahead. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the green as investors digest yesterday's rate cut. As of noon Eastern, Bitcoin rose 1.5% to $117,600. Ether climbed 2.5% to just above $4,600, and XRP gained 3%. Taking a look at Gemini real quick, shares are bouncing back today after shedding its IPO gains yesterday. As of noon, the stock rebounded nearly 5%, trading at the $25 level. Its IPO last week opened at $28 a share. Another thing to pay attention to, XRP and Dogecoin tied ETFs opened for trading today after a rules change from the SEC. We'll fill you in on those details in just a moment, but the Rex Osprey Doge ETF rose 1.3%. Meanwhile, the Rex Osprey XRP ETF ticked lower by 0.15%. Okay, let's talk about the top stories. Shares of Bullish are on the rise after the exchange reported its first earnings yesterday as a publicly traded company. The company's CEO, Tom Farley, joined CNBC's Squawk on the Street this morning to address what caught investors' attention in the report, like how the company is diversifying its revenue streams.
Our non-transaction revenue has surpassed 50%. We guided to something around about 60% in Q3. We're seeing a lot of growth from institutions, really hitting on all cylinders other than low volatility leading to relatively lower volumes in the exchange business. But I think investors expect that to operate on a bit of a sine wave.
Bullish posted a net income of $108 million in the quarter compared to a net loss of $116 million a year ago. Shares spiked more than 11% as of noon. Just yesterday, Bullish announced it secured its New York State BIT license, clearing a major hurdle to expand its services here in the US. Next, the SEC approved a change to listing standards for crypto-focused exchange-traded products on major exchanges. According to Commissioner Hester Peirce, who leads most of the agency's recent crypto efforts, the new process would reduce the time and resources required to bring new ETPs to market. Along with passing the new standards, the Commission also announced it approved crypto-tied products, including those Dogecoin and XRP spot funds from Osprey we mentioned earlier, and Grayscale's Digital Large Cap Fund, which holds a basket of large cap tokens. Last, Ripple Labs is partnering with Franklin Templeton and Singaporean bank DBS to offer institutional and accredited investors with trading and lending services. DBS today announced its digital exchange is listing Franklin Templeton's tokenized money market fund alongside Ripple's US dollar-tied stablecoin, and is allowing certain investors to interchange the two. The announcement also mentions DBS is looking into letting clients use shares of Franklin Templeton's tokenized money market fund as collateral. All right, turning back to the markets for our main story, Crypto World's Talia Kaplan spoke with Kraken global economist Tomas Perfumo about the Fed's rate cut and what it could mean for prices going forward.
Major cryptocurrencies are climbing this afternoon along with stocks as investors rotated back into tech now that the Fed lowered rates as expected and signaled more cuts are on the way. However, during a news conference yesterday, Fed Chair Jay Powell discouraged investors' hopes that the central bank would be on a lengthy rate-cutting path this year, calling the latest cut, quote, risk management. Policymakers are predicting 2 more reductions this year, but just 1 next year, while traders had priced in 2 to 3 more cuts next year. So how do you think all of this is impacting crypto prices right now?
Yeah, so in the short run, as you mentioned, this recent rate cut was largely priced in, as well as a couple more going into the end of this year. And I think that is broadly supportive of risk assets in general. And so you get that kind of bid in crypto in the short run. I think the market is speaking for itself. I mean, it already is forecasting another 100 to 125 basis points of total reduction from here to the end of next year. And so it's going to be kind of an interesting position that the Fed's being pushed into, pushing against market expectations versus how labor markets are doing, how consumer price inflation is doing. I think in the short run, we're kind of playing this guessing game. And again, broadly supportive of risk assets where you have this tendency in rates coming down. But longer term, it really doesn't change the thesis or trajectory of Bitcoin as the soundest form of money. It's really a currency that ultimately you can plan against.
So, what's your outlook for Bitcoin for the rest of the year? Today, Bitcoin is trading at the $117,000 level after hitting a new all time high last month above $124,000. Do you think the cryptocurrency will get back to that level or higher before year end? I mean, FudStrat's Tom Lee told CNBC a little more than a week ago that he thinks Bitcoin can easily reach $200,000 by the end of the year. Do you agree?
I mean, I can't give price predictions, unfortunately, but I'll break down the thinking in a few different ways. It's important to recognize that crypto, Bitcoin in particular, has a supply response design issue, if you will, in the sense that if gold prices were to double, for example, you'd have a lot more mining production start to increase and start to flood the market with additional supply to kind of even out that demand profile. With crypto, you don't have that same kind of supply response. So price goes up, the same number of Bitcoins are going to get created day in, day out through the mining process. And so naturally speaking, in the context of crypto markets, it's very much marginally demand focused. So that is, if there's a big spike in demand and supply is not moving around to help meet it, price naturally has to grow very quickly. And so that's why you see a lot of high volatility, exponential move in crypto in general, historically speaking. Now, in this moment, I think the biggest sources of marginal demand continue to be through some of these, let's call it like TradFi vehicles, that is the ETFs, for example, which have already purchased about $20 billion of Bitcoin year to date. MicroStrategy, that's another close to $20 billion coming in. And then, of course, a host of these other digital asset treasury vehicles that are bringing fresh capital into the industry, purchasing spot crypto commodities like Bitcoin. And so, in my opinion, that's going to be coupled with just the macro environment, whether it's inflation, labor markets, et cetera, that kind of risk on sentiment is what I think is driving a lot of the price action. There isn't some kind of very crypto idiosyncratic factor that's really promoting like a huge run. And at the same time, I think because of that, we're not seeing any kind of systemic risks or points of concern that would cause me to think like we're entering bubble territory and that it's going to pop for some particular reason. So I think right now people are just pretty bullish. They're positioning themselves perhaps neutrally to positively long crypto, and that's what we're seeing play out.
And I want to focus on crypto ETFs because the SEC approved proposals from major exchanges to change its listing standards for exchange traded products. SEC Commissioner Hester Peirce said that the new process would reduce the time and resources required to bring new ETPs to market. Explain what this rules change means for spot crypto ETFs like the XRP and Dogecoin funds that came to market today.
Yeah, so straightforwardly, all exchange traded funds have to go through this kind of rulemaking process where they have to apply for permission because there is no like legislatively clear path for an exchange traded fund to come out to market the way that you might see like a normal company go through an IPO process. And so they all go through this kind of application process. And what we've seen through crypto really over the last decade was this long drawn out process of applying for the ETF. And I'm talking about the Bitcoin ETF here. You apply for the ETF, and then there's some rationale or reason that was given for the denial. And each time we went through this application process, we would see a different reason for that. And the industry was slowly curing all these difficulties and whatnot up until, of course, we had the Bitcoin ETFs launch early last year. And so what happened now with this new like ETF rule process, if you will, is just full clarity for the industry. That is, if you want to launch an exchange traded fund on these commodities, what are the requirements or prerequisites, whether it's an active futures trading market where contracts exist on CME, for example, for some of these commodities, and whether that basically gives permission for new vehicles to come out without this long drawn out kind of discovery process of guessing and checking whether these products can come to life.
So what do you think will change now for crypto ETFs, especially given there are still several applications pending with the SEC for ETFs tied to different altcoins, including Litecoin, for example?
I mean, I think having this kind of like standard approach to analyzing the ETFs or the applications that is going to allow them to come to market faster. And to the extent that there are new coins coming into it, it's not like you can just list any coin at this point. Some of these rules have different criteria in place. Like, for example, does an existing futures market exist traded on an exchange like the CME group? And so I think you're just going to have a host of different ETF products on known commodities where these conditions are already met, where they're not going to have this long drawn out process. They're going to come to market more quickly, and they're going to be vehicles for additional capital to move into some of these, altcoin, effectively spot commodities. And so you're probably going to see like a natural bid in some of these, I think, through these new ETF products.
Okay, that's all for Crypto World today. We'll be back again tomorrow. We'll see you then.